So you've been in office, actually, at the White House when there have been crises that people worry about. And you've got to think about the messaging. And listen, when President Obama was in office in the recession, I remember being critical at times of an administration that was overly optimistic about things that maybe they should have been less optimistic about. But what do you believe Americans need to be worried about? Is it the stock market, which Donald Trump carries on about all the time? Bottom line is the stock market. In fact, I want to just put up a chart of the Dow going back to 1929 or something, the Depression. Stock market tends to go up over time. It tends to recover. It recovers from the recession. It recovered from 9/11 within a month. What's the real worry here? Is it the lifestyle change we're going to have? Is it consumers who decide, I'm not going to the movies, I'm not going to the ballpark, I'm not going to the casino, I'm not going on a trip, they don't spend their money, they stay home? What's the thing that you're most worried about when it comes to the economy?
So what I would say is exactly what you said, which is the stock market's not being irrational. They have very little information because we have so little testing here. And so they, just like all of us, don't really know what the impact is going to be on the average American and the average American's life. And the thing I would explain to people is that normally in a crisis like an earthquake, economists think, yes, growth goes down 1/4, but it rebounds when you rebuild. That even happened in SARS. Growth went down in the second quarter of 2003, and it rebuilds. But if you have a sustained lack of inactivity, just a simple example, if you cancel your spring vacation, you're probably not taking two vacations in this summer. That's activity that's lost. So I think anybody out there who's in the old mode of projecting that will have a recession in the first quarter or downturn, but it will come back easy in the second or third quarter is kidding themselves, both because there's no evidence this is going away that quickly. And second, a lot of that consumer activity, 70% of that driving GDP in the U.S., the thing we've been counting on, some of that will go away and it will not necessarily rebound later. And that, I think, has markets worried, not about spend, not about politics, but actual economic demand and consumer activity.
So let me ask you this. I don't have too much time left, but I want to ask you about the things that the government can do, the things that you would have done or you would have talked to your presidents that you worked for in times like this. Are we talking about tax cuts? Are we talking about the Fed cutting interest rates? I know that's not something the president's supposed to tell the Fed to do. This president doesn't seem to have any problems with that. But what do you think makes sense?
When you look at the things we've talked about, whether you're going to close a school or go on travel, it's not very clear the Fed cutting rates, even if they should do it, will have as big effect. I think what I would be doing is I would be spending dramatically on the things we need to prepare. That's the twofer. It will give a little economic stimulus, but you're not doing it just to stimulate the economy. You're doing it to get test kits, to do whatever is necessary to help people stay home if they need, help people go to work. That kind of all-out mobilization, mini war-like mobilization would give people confidence. It would help us contain it. And yeah, it might give us a little bit of an economic bounce, a little bit of stimulus. That, I think, is the win-win situation.